Close your long positions. That's exactly how I should start this video. And no, it's not clickbait, not just words, not an attempt to grab your attention. This is objective information from the charts. You know very well we need to buy fear and sell euphoria. Right now, everyone, absolutely everyone, is convinced we're heading for more growth, alt season, inevitable multipliers, and so on. It's already happening. We are in the midst of alt season. That's true. You know, I've been expecting Bitcoin to reach the 86K range for the past few months. We've been longing all these moves. But here's the thing, we're now in the phase where meme coins and some older coins are pumping. We're seeing 100% moves, a few multipliers every day. But that doesn't mean there won't be a sudden drop. It doesn't mean there won't be liquidations. Alt season or a bull market doesn't mean you just go 20% leverage on longs and print money. We're at an extreme greed level, folks. The market is euphoric, and that needs to cool down. If we look at historical data, you might argue, this doesn't work because we're in a bull market in parabolas, etc. Zero. I'll challenge that and show you examples from the charts and historical data. So, get comfortable and listen closely. Look, we're in the 90-92 range. That's the zone where I start getting skeptical about the market. When it was at 80-78, I said in my private chat, let's wait for 90. 90 is the level where I anticipate a sharp drop or some negativity. Maybe someone gets hacked, an exchange partially scams users, there's more FU'd about Tether, or a local conflict breaks out in the Middle East. Why? Because historically, 90 is the level where sharp drops occur. This happened between 5th, 10th of March. We hit 90, then sharply fell to the 70-75 range. Let's see how this played out in the past. Again, we were rising rapidly here. If you open the daily time frame, you'll see how it unfolded more locally. We had a very strong move here. We're climbing rapidly, everything's looking amazing. Plus 50%, plus 60%. Then suddenly, bam, a sharp squeeze. It was completely unexpected. Everything seemed great, perfect. A solid green candle, euphoria. Continuing longs, breaking ATH, and then, bam. You might look at this drop and think it's no big deal, that we're still in an uptrend. I agree with you, but leveraged positions, especially futures positions, were liquidated. A 15% drop means liquidations on 7x and 6x leverage or higher. Forget 10x or 20x, they were wiped out entirely. Even in a bull market, sharp drops and liquidations happen. It's normal. The market needs to cleanse itself. We need to cool down the euphoria index. Now, if Bitcoin drops 15%, imagine what happens to altcoins. I'll explain this further along with dominance. Another example, you might say, we're in a bull market, it's parabolic. But back then it was already near the end of the ATH rally. Look, everything was going incredibly well. Our previous peak was in the 20K range. We broke that, hit the 40K range, and made a 2x move. Then came a sudden and very sharp 30% drop. A 30% drop means 3x leveraged Bitcoin positions were liquidated. Now imagine what happened to altcoins. Some altcoins dropped 40-50% during that squeeze. I'm not trying to scare you or tell you to close your swing positions or sell your spot holdings. I'm just saying, if you're playing with futures or long altcoins, set stop losses. You can't just wait it out. If you're sitting on 20x cross leverage thinking you'll ride it out and add margin, no, you won't survive it. The drop will be brutal. It's better to stop out locally, take the loss, let the price drop further, and re-enter on the reversal. That's the better approach. Consolidation is always necessary. We need to form a range. History shows there were 28% drops. We bounce back, then another sharp drop, another 30%. So whether it's 30%, 25%, 15%, or even just 12-10%, the market needs to reset. It's normal. It doesn't cancel out the bull market. After the drop, we could still see another 120% rise in Bitcoin. For alts, that's dozens of multipliers. But look at the current situation now. Turn this off and watch. On the weekly time frame, everything looks amazing. Why are you so sure the next weekly candle won't open as a sharp black squeeze to test at least this weekly inefficiency? Additionally, on the BTC CME chart, there's a large gap. Why do you think this gap shouldn't be filled? It's a significant void. Why not see a sharp drop at the start of the week, Monday or Tuesday? That drop could align perfectly with filling the gap, around -14, -15. You might say everyone will expect the gap to fill, short it, and so on. Fine, maybe the gap won't be covered, but we could still see a local drop. Looking at the daily range, we can see a daily imbalance. This imbalance acts like a price magnet. It's an inefficiency where sufficient volume wasn't traded. Sooner or later, price is drawn there. In the current situation, with a fear and greed index of 90, a drop of at least 8% into this range seems highly plausible and logical. I'm not saying we should expect lower levels, but it would be comfortable for me in these ranges. Late longers and over, leveraged futures traders need to be liquidated. Some might say, I'm longing, making a few X daily or weekly. They'll all be liquidated. Whatever they make in this market, they'll lose in sharp squeezes like these. These squeezes are inevitable. If we open the daily time frame, we see what? Daily inefficiency. Again, it's a magnet for price. But beyond that, if you open the 4-hour time frame, it looks stretched. Liquidity is building here. Local order flow and local liquidity interactions. But it's insignificant compared to the broader picture forming. Without a doubt, we could still break the highs, grab liquidity, and drop lower at the week's open. It's possible we could see manipulation above next week. If that happens, I'll be looking for short positions. Even in a bull market, I'll cautiously short with small risk. Yes, it's a bull market and shorting isn't ideal, but I'll do it to hedge my spot positions. If there's a spike and a setup forms on the 1-hour or 4-hour time frame, I'll enter. Not blindly though. No reckless market orders or floating stops. A strong high needs to form first, then I'll short with the aim of taking it out. But honestly, I doubt Bitcoin has enough momentum to breach the current high. I think it'll likely roll over from here. Moreover, look at the euphoria on Polymarket and other platforms where people are betting Bitcoin will hit $100,000 by year's end. I find that hard to believe. Really, when everyone believes it, we typically fall short by a bit and drop sharply. That's just how it usually plays out. There's only 6% left. This reminds me of the last cycle. Everyone was expecting 70, 2K. We barely missed 70K by a few percent and crashed. The peak was set at $69K. Market makers, manipulators, big capital. Call them what you want. Love to do this. Something similar is what I'd like to see now. Imagine this Bitcoin dominance. Yes, it's overbought and likely to reverse soon, but that doesn't mean it'll happen right now. Why not have one final squeeze? Bitcoin dominance recovered nicely and BTC remains strong. Why wouldn't it make one last sweep? Imagine Bitcoin dropping locally by 6% while dominance rises. Ideally, I'd prefer Bitcoin's drop to be accompanied by a decline in dominance. That would be great. But what if the opposite happens? If Bitcoin drops and altcoins plummet 15–20%, what then? Look at USDT dominance. USDT dominance shows how Tether's share behaves in the market. During sharp declines, when markets rise sharply, we see a corresponding increase in dominance. Okay, great. But during sharp drops, significant inefficiencies form. This is on the weekly time frame. After a sweep of major liquidity levels, why not see a corrective move? There's nothing wrong with that. Even as the market falls, corrections occur. It's normal. Drop correct. Drop correct. Why wouldn't we see a correction after another fall here? So, corrective movement in USDT dominance means market drops. If Tether's dominance rises, the market falls. It makes sense overall. A weekly inefficiency has formed here. I'd like to see that tapped, even if only for a 14% local increase. Again, the market's fall would be significant. Drops of around 25% on average in similar cases. Take altcoins as an example. Let's take Tomcoin for instance. Sure, it swept liquidity here and formed some zones. Look, there are certain zones of interest here. We formed this breaker. If we pull the fib, we have the 0.5 range. Why not allow at least some correction into this range? This would be a drop of about 6, 7, 8%. TON is a high cap asset, so the drop will be smaller. Or rather, yes, smaller. If we take some low cap coin, the drop could be much more aggressive. Hypothetically, if we stay in this range, we might drop around 15% to clear this low. But listen, I don't want to hype. I'm not saying you should start shorting here. I'm not here to write, it'll hit $100K, you'll get rich, buy everything. No, I want to give you objective information that can actually help you make money. However, keep in mind, if you have swing long positions open, if you're holding a low cap coin, I mentioned in the last review to long here, you should already be seeing significant profits. For instance, I specifically told you where to enter. You entered, and at the peak, you were up 37%. If you've got a good entry on your swing longs, like in theta or anything else you've longed, just set a stop at break-even. My goal is to ensure you don't overplay this. Anyone overplaying here, look, liquidation. Even with 6x, 7x leverage, liquidation. Those who entered here, 5x leverage, liquidation. All of this will be liquidated. Don't lose your deposit at this bottom. Wait for the market participants to be liquidated and enter like smart money. Enter during liquidations at the bottom and patiently buy the dip. But this doesn't apply to spot holdings. If you've bought spot, don't sell it just to try and rebuy lower. The market could overheat further before dropping. You'll panic and make mistakes here. Be patient with your futures longs. It's better to wait, not rush, and buy the dip. Why? Because every blogger out there right now is saying, buy the dip. This is a bull market, sure. Long anything and get rich, right? No, that's not how it works. It'll fly sure, but it won't fly straight. These multiples will come with sharp drops. Let me show you how this works. Solana. Let's look at how Solana behaved in the last cycle. Yes, it skyrocketed. Amazing multiples, incredible growth. But look, there were sharp drops of 40%. You look at the chart and think, if only I'd bought here, held for 100x, bought a Lamborghini, you wouldn't have. Even those who supposedly bought at the bottom faced local squeezes of minus 20%. Someone who entered here, not the very peak, but here, still faced a 50% drop. You think you've bought the dip, the coin seems to recover, but then it drops another 37%, even with 3x leverage, liquidation. Not tanks, not even 5x, 3x. You open 3x leverage, you get liquidated once, twice, and then it finally flies. This is normal for a bull market. Sharp drops will happen even locally. Here's a sharp drop, minus 30%. This is normal. Don't get too comfortable. Even in this market, we've seen these drops on Solana. Locally, minus 17%, minus 20% at a minimum. Expect sharp drops of 15, 20%, and only then look for long positions with confirmation. Those who longed here on hype got squeezed for 40%, 37%. It's painful. Even locally, it looks like recovery, but here's another drop, minus 15%. Another local drop, minus 15%. Why wouldn't Solana drop another 15% to fill this inefficiency? I'm not saying you should short, but I want you to stay safe. If we open the total 3 chart and look at how altcoins are doing overall, you'll clearly see zones forming on alts where it'd be interesting to open long positions. For total 3, mark the 680 billion range. That's where I'd like to see a small correction, or at least a correction to the 760 billion range. Small drops of 6-7%. Ideally, a sharper drop would clear out late longs and weak hands before the market moves up again. This is normal. Look, we're rising here, super strong, but a local drop. Bam, minus 15%. Another local drop, minus 10%. After this significant rise, say we've grown 50%, why not drop 15-16%? I think it makes sense. That's what I'd like to see. Sure, you could argue, it's parabolic, we're flying. Okay, that's your view. I'm sharing mine based on my experience. This is my main focus, and I'm sharing it with you. You can argue and have a different opinion, but understand the whole Trump situation is already playing out. It's in the market. Steering up some negativity is normal. So keep this in mind. Buy the dip when the fear index drops to around 75 or 80, but not at 90. That's my opinion. For the next altcoin, as I've mentioned before, I'd like to see it drop to the $1 range. I'd happily buy it there, setting my stop loss either just above or a bit lower. It depends on the level of risk you're comfortable with. Mudcoin looks ideal, as does Toncoin, as I've mentioned before. All these altcoins, like Theta, for example, if you check, it's had a nice rally, right? I consistently recommended buying in this range, even lower if I'm not mistaken. Around $1.05, I suggested buying it, even opening swing positions. That's a 54% gain. I even wrote about it in my channel. Subscribe to my Telegram if you haven't already. Now we could see a drop. Maybe 20%, maybe 15%. I'd really like to see that happen with this asset. If you look at the daily timeframes, that low could easily get taken out. Trust me, that's okay too. At the very least, a minimal drop would be to this week's weekly open, which will become last week's open after the weekend. Something like $1.38 to $1.35 would feel comfortable to me. At the current price, I have no intention of longing. That's about it. Like this video, leave your comments and share it. If your friend is going euphoric with their longs, show them this video. Understand this if you opened a long position here with, say, $1,000, just for example. Let's say you opened it with $1,000, maybe with 3x leverage. Hypothetically, you entered here. If you instead bought after a drop, you could open the same size position with 5x leverage instead of 3x. That's a 1.5x increase in your position size. And when the price comes back to this range, you'd already be up 50% on your margin. But if you entered at the current price and experienced a drop, you'd only break even on the way back up. Buying lower nets you that extra 50% gain. That's why the percentage drop makes a big difference. Let me show you another example. If you buy here and take profit here, you'd earn 1 to 4.4. So risking 1%, for instance, you'd make 4 and 4%. But if you longed lower, you might think the difference isn't that big. However, with the same take profit, you'd make almost 1 to 8, meaning you'd earn twice as much here as you would here. That's a huge difference. Even a 10–15% difference at the bottom significantly affects future profits. Hypothetically, if you bought at a large volume here, let's say $50,000, you could make $250,000 or $200,000. But if you bought lower, you could make $400,000 to $450,000. This slight adjustment in volume shows how massive the difference is. You could earn multiple deposits this way. But this is not an invitation to sell here just to rebuy lower. That's a bad habit. You need to sit tight and hold onto your position firmly. This is for those looking to add more funds. It might help you a little. In any case, if this helps preserve your capital during a drop, I'll be happy. However, there will always be coins that defy the market drop. For example, XRP is currently surging, as is VF. Some coins will outperform the market. Keep an eye out, analyze. Look for compression liquidity on the 4-hour charts, for instance, alright? That's it. Take care, good luck, and make some money.